Okay.
So for commercial loan, my net worth needs to be at least a loan amount, right?
Correct. Yes.
Do you know how does that net worth calculated? Like, does that include debt too?
Yeah. So basically, I use a app called. It used to be called Personal Capita, but now it's called Empower.
Mm,
But basically, it's your assets minus your liabilities, and your mortgage is your liabilities.
I see,
So
I
what
see.
I do is I just use something called Empower. Like you can download that. It's a free app. And basically it makes you add all your bank accounts, your stock accounts, your real estate that
Mm,
you have. So you can include the loan too, and then like how
mm-hmm.
much rent you're getting. So basically, your net worth doesn't include your primary residence. Actually it may, but yeah, just basically your assets minus your liabilities.
I
Um,
see.
so yeah,
Mm,
that's why I was looking in like cheaper markets, right? Where my loan amount, well, my properties were only like what, half a mil. So I mean, my net
yeah.
worth definitely covers that. But if you have three properties, you must have a pretty decent net worth. And if you buy a deal good enough, they may overlook it. You know
Okay.
what I mean?
Mm-hmm.
Or if you work with like a local community bank, they may overlook that aspect if you buy a good deal with like instant equity day one.
Mm-hmm.
Yeah.
I see. Yeah, it's good to know. Yeah, because definitely, because I do have some like, I mean, I have a good amount of liability too. So, um, yeah. Okay.
Do you know roughly what your net worth is? Have you
Uh,
calculated
yeah, I do use the software like Monarch Money.
it? Mhm.
More of a recent thing, but yeah, they do have like a network thing. Yeah, then I might be forced to go into more cheaper markets because I
Yeah,
thought I
there's
was. Mhm.
nothing wrong with that. I mean, you can build your track record there too, right?
Mhm.
That's what I did. I mean, I'm 5 million, but I think back then I was probably like 3 million back
Yeah,
then. So, but yeah, and then you're still working at W-2, so they factored that
hmm
in as well. So yeah, you might just have to go and $1 million, sub $1 million, but it's still gonna cost you like what 250K, right? I mean, if you want to do
yeah,
25% down. So
yeah,
even me, I'm not batting at like $1 million plus properties yet. Maybe my next round, I'll be buying stuff in like the 2 million range if I have access to that. But yeah, I mean, I was batting in sub million for apartments
Why?
myself. I was basically buying or looking at apartments under 1 million myself, right?
Oh, like, was there a reason why? How that you came up with that number?
For me, for under 1 million,
Hmm
um, I guess honestly, it was just because like all the single family homes I bought in California were 1 million, so it was just
mm
like comfortable for me.
hmm
Um, and then I kind of figured that it's either do 25% down, and I wanted to self fund my renovation. So, obviously I had to fork over like I think what 300,000 at least in terms of like renovation and down payment. So
hmm
I just kind of knew that like my purchase price would be a lot lower, and then I wanted to be able to like double, triple the value of whatever I bought too.
hmm
So me mitigating risk was buying a property at 500,000, right? Because I bought single family homes at 1 million, and this is my first apartment complex. And then I just thought, well, it's 500,000. It's cash flowing like crazy. I bought it into equity day one, so you can't really lose, right? So you have margin because I knew that this is my first deal out of state in a state I'm not familiar with, doing an asset class I wasn't familiar with, right? So I think I subconsciously was trying to mitigate my downside risk, if that makes sense.
Yeah,
Um,
totally. Yeah, I'm trying to like think how I wanna play this game too, like, and like what's a safe number since it's gonna be my first deal, right? So I don't wanna go like I don't wanna stretch too much. Um,
exactly.
yeah, but do you think it's still doable to get something for 500?
Yeah, I mean, like I said, it depends on the market, and it might just be a smaller unit, right? Like I had
Mm,
access to like a 10 unit for like 400K in like I think somewhere Arkansas or something like that. So I mean they're out there, but it's just going to be a smaller unit maybe. I mean I got 2 apartment complexes for under $500,000. I don't know if that's lightning in the bottle for me but they're out there. I mean I got 2, so you know, and like you said, you don't want to like stress about it. Like if you kind of you know, flop on it, but obviously you're self-educating yourself, but like it's just not stressful of like, okay, something went over budget. Like if let's say your renovation shit. Like for me, my renovation, you know, even if I went over budget renovation, I wasn't stressed, but it was just when I did, you know, 2 apartments in a mobile home park, that's when I started getting kind of stressed because I didn't know if I had enough money. But if you know that you can take the deal, then you know, I pretty much knew my 26 unit would be successful, even if it costed me more than I anticipated and took me longer than I anticipated. But because I just had enough money to kind of like cover and sustain, it was very reassuring, I guess, to me. And then the mobile home park threw a wrinkle at me because I didn't expect to be losing that much money from it. I thought it was going to make me money. So, you know, kind of punching myself because I had the opportunity to buy another 20 unit next to my 26 unit, like 3 miles away. And I should have bought that instead of my mobile home park. I'd probably would have hit my goal of $20,000 a month in cash flow if I had bought that by now. So yeah, I think maybe like, cause you said you kind of want your first deal to kind of like go well. It's kind of weird, but like if you kind of get like if my mobile home park deal is my first experience in real estate, I'd probably be too traumatized to want to go back to real estate. So there's nothing wrong with like buying something small and like, you know, making sure it's successful, and then you kind of get your feet wet, and then basically from there you can scale. Because like I said, for me, I started, you know, I was aiming for under $1 million. I mean, I was making offers on multiple properties. Like I didn't really discriminate on price. It just happened that I closed on the ones that, you know, were $500,000 under. But you know, like, yeah, go ahead.
Did you pick Oklahoma market first? Because I mean, you talked about because you had that great property manager, but did you send letters to other places too?
Yeah, I sent letters to Tennessee, Alabama, Oklahoma, and I think Arkansas. So I kind of spread a web, and ironically, it just so happened for some reason that I got the most responses from Oklahoma, and then I had a great property manager there. But I was sending letters to like Alabama, Tennessee, and like, you know, in all those markets, I did come across like, you know, deals under $1 million. You know, so it's definitely doable. And like you said, the next round that I buy, I could probably aim for like maybe that $1 to $1.5 million range, or maybe closer to $2 million, right? So you slowly level up, and then maybe after that one, I could progress to like a $3 or $4 million asset, right? And something to keep in mind is we're doing this solo, right? We don't have partners. And it's just owning it. So, you know, we can't. I can't go as fast, right? But if I wanted to syndicate, I could easily buy 1,000 units, right? Well, learn the model and all that. But in terms of like the team, the operations, knowing the market, that's easy in that aspect. But raising the money and then building the team, that's a little bit different. But it's definitely doable for me. Like if I wanted to go that route. So
so
yeah, wrong with that.
say like I'm almost kind of close to finishing your course, but where, so like I have all this information, right? But I think it'd be nice to know like kind of flow of things. Like where should I start? Like should I start sending mailers first, or do I need to like research on the PM first, because PM gives a lot of information, right? For me to, even if I get like start getting calls and like negotiate with them, I need to know the numbers. But like, do you have any suggestions?
Yeah. So you're right. Your knowledge of action, it's pretty much, you know, you have to go hand in hand, right? You have to get information and take action. So the freeway, if you're not ready to buy in the next 6 to 12 months, the freeways, you just start talking to brokers and property managers in various markets. that's how I started, right? Like I just talked to various brokers, various property managers, and honestly, they're not going to bring you good deals, right? The whole point is just to understand the market, understand the boots on the ground, and kind of build out your boots on the ground team, right?
Mm.
And then the moment you're within about 6 to 12 months of actually buying a deal, and what I mean by buying a deal is, you have, assuming $1 million price point, at least 300,000, right? To take down the deal. Then at that point, you should start sending letters out, and then basically just hone yourself in terms of talking to owners and underwrite deals, and then make offers, and then basically you just do that until you get a deal under contract, and then that's how I did it. Like literally, it's that easy. Just a matter
I
of like,
see.
are you willing to consistently do it? And like I said, you just have to have the money, right? Like once you know you have the money ready, then it's just a matter of sending out letters every month, underwriting deals, talking to lenders, making offers, and eventually you'll get it, right? Like I was making offers every week, and eventually you'll get something.
Yeah.
Um,
You said 300K for 1 million, right? But that's 25% down only 250, and that leaves with only 50
Correct.
for
That's
like
conservative, right? That's conservative, and that's assuming like not much renovation either, right?
yeah.
So
Seems like
you're
that's not not enough. I'll
yeah,
be
that is
worried.
that's assuming you bought like a fully turnkey asset at 1 million, and basically you're buying a turnkey asset that cash flows day one, and you have $50,000 reserve, but that's probably not realistic, right? And with interest rates being this high, unless you get creative finance deals, you might have to put more than 25% down too, right? So that's just like bare minimum to start. But like if let's say you're at the $500,000 price point, or lower, then 25% becomes 120K down ish. And you have 180 for renovation / reserves, right? So that's why I said you kind of have to like work backwards. So
Yeah. So maybe then like 1 million is kind of
that's
high.
top end, right? That's top
Yeah.
end, right? Like, I didn't start off in the million range either.
Yeah.
So realistically, probably 750 under is probably your starting point.
Got it. Yeah. I think that's good to know.
And there's nothing
Yeah.
wrong. Let's say you get a deal that like you can't take down yourself, then you can like always wholesale it and like make a quick, depending on how good you have it under contract, but you can make like a quick 50, 100K just to
How
flip
does
it.
that how does that work? Do you need to have the cash to wholesale it?
No. So to wholesale, all you need enough money for is earnest money deposit, which is typically 1% of the purchase price. So, and at that point, you're basically trying to flip this contract to another investor who can take the deal down.
What if
But
you
yeah,
don't find the other investor?
well, then you just cancel the either you extend the contract further, or if they don't extend it, then you just cancel the contract and you get back your money, your earnest money
I
deposit.
see.
Right. So
Okay.
the goal is like you want to, but I will say that a lot of wholesaling is kind of like, I don't know how to describe it, like you'll get a lot of people who aren't serious, or they'll try to like wholesale your wholesale deal. So like for example, you got it under contract for 500,000, and then you want to flip it to me for 550, and then I want to flip it to someone else for 600, and someone else wants to flip it for 650. That's called daisy chaining. So you will deal with those type of stuff if you go down that route, but it's not a bad way to like get your feet wet. Like if you have access to like a lot of investors, like I could have wholesaled my deals, right? But the issue is, can you find the buyers who can take down
But
the deal? That's the hard
right,
part.
but would seller be okay with that?
Yeah, as long as you're transparent up front, like me, I'm all about transparency. But basically, as long as you say up front, like, hey, like, got the under contract, like, it doesn't make sense for me right now, but would it be okay if I were to find another, buyer who's qualified, and then we'll meet whatever, and then if it works out, then I can basically flip this contract over to them. You know what I mean? As long as you're like transparent about it, because like ultimately you're trying to help somebody sell the property. Like you're like an unofficial broker, right? So it's just like finding like, all right, okay, you can't take down the deal, but let's say you bring it to me and I can take down the deal. And then pretty much I take down the deal and then, you get paid whatever the difference between what you got under contract and what you sell it to me for. So that's the whole
I see.
concept of it. I mean, don't bank on it, but
Very, yeah.
it's just a way to like, if you can't take down a deal yourself, you can still profit on it. Or you can just give it to like a bigger investor and just say, hey, like, can you just like give me some small equity in the deal? I'll just give you the deal. You know what I mean? Like they'll keep you in for like, oh, we'll give you 5% equity or whatever percent equity just for giving us the deal.
Yeah.
And then you don't have to
yeah.
do much. You know what I mean? So like that's another
Yeah.
possibility as well. But then you have to, it's a partnership too, right? So
Yeah, definitely not the route that I want to go, but I mean, I'll once I start getting deals, this could be an option, but not something that I'm looking for.
yeah,
That's
like
good to know.
I'm the same way, like, but obviously you have to know all the options, have more tools in your tool belt. So just in case like that's your only option, then it's better than nothing, right?
Yeah.
Like, well, yeah, I don't prefer to partner too, but well, shoot, if I still get some equity and I don't do as much, then
Oh yeah, I was talking about wholesale. It
yeah,
seems
yeah.
like a different route.
It's like I didn't do the route either, right? I had opportunities to wholesale deals, but I was just so focused on getting my own deal. That I never even thought about it myself. So yeah, there's nothing wrong with that too. But just know that you might, pass up some good deals. Like I think I definitely did. That I either
For
could have
wholesale.
given to someone else or wholesaled it, right? Or if I'm nice,
Yeah.
give it to someone else and just say, hey, like, scratch my back, I'll scratch your back, type of thing.
Yeah.
I definitely had access to like some good deals that are bigger than I wanted, but like when I start looking, I'm gonna reach out back to those people. I'll be like, hey, like, are you still selling, or what's your situation like
Yeah.
with that?
So you recommend talking to like various brokers and PM first.
Yes.
So before doing that, I should kind of select maybe 3 markets that I wanna do that, right?
Yeah. I have an Excel doc in the program, right, where
Yeah.
help decide your market. So just go through that just to get a feel. But like you just can pick whatever market, But I use city-j.org to look at the population, the crime, and all that. So you can go there, just pick like 10 markets to be honest, and just like start talking to property managers is probably the most useful. Brokers don't bring you good deals. It's gonna be the property managers, and you just can be like, hey, like I'm looking to buy an apartment complex in this market. Like, just kind of want to, pick your brain and see if you have access to any deals. That's how I would do it.
Do you think I should hold off on the mailers
Yeah,
first?
you could. Like I said, this is the free one, right? Like you can do this for free. Like, it doesn't cost you any money or time. I mean, well, time, but like no money. So I would just talk to the property managers first, and you might be able to get a deal about even doing the mailers sometimes.
Really, through PM?
Yeah, through property managers if they have access to a really good deal. I mean, it's like shot in the dark, right? You don't know. Like I'm definitely gonna try to utilize my property managers for off market leads, but so far hasn't given me a good deal. I would say most of my good deals were through direct mail. And a broker did reach out to me for that 20 unit next to my 26 unit. And I didn't think it was a good deal at the time, but looking back, it was a good deal. So, but that was like a unicorn event. I've never seen, the broker reached out to me because he saw that I bought that 26 unit like 3 months ago. So he just like, oh, you're serious. I want to sell this to you. But that's rare, but I do have his contact still, so I'll reach out. So like, yeah, you just want to like get out there and know people first.
Okay.
Before you start doing repairs, and like I said, you have to have the money ready to go too, right? So
with I think like lower purchase price, I think like I should have enough. But even then, I should talk to brokers and property managers first to just like, get the information.
That's a good first step, just to even find your market, right? Like I was in a couple markets before I settled down in Oklahoma, so you'll get a lot of insight. But obviously, property managers will talk a little bit more positively about it because they want your business. but they're the most realistic because they're doing the day-to-day stuff. And then you can usually just be like, oh yeah, like, do you know anyone who wants to sell their apartment, or do you know any like real estate agents that brokers will sell apartments? And you're just trying to spread your web out there to get to see what it's like and just see deals. And then, but
Yeah. Okay.
obviously I find my best deals, through mail without
Mm-hmm.
anyone help.
Yeah. Yeah.
So yeah, just start talking to property managers. It's probably your first
Okay.
bet.
Yeah. Yeah.
Which
So
what markets are you trying to hit?
I mean, I haven't really looked into it much yet, but I think I told you last time because I have residential one in Philly, so that
Yeah.
like that around that area, or maybe like I thought about Arizona as well because I heard good things about it, but I feel like the price point is a little bit higher there.
Yeah, it's gonna be
Right?
yeah.
Yeah. And then the other one's Oklahoma because I already have a contact, another investor who's you.
Yeah,
So,
yeah. I mean, like I said, once you start looking at the markets and talking, you'll get a sense of the price points that makes sense for you.
have you looked into Arizona?
I think I did. Well, because I was looking everywhere when I was doing mobile home parks. So I kind of saw everywhere. And yeah, it just seemed, I was looking like Tucson, Arizona a little bit because that's near university. But yeah, the price points are higher. Like, you're probably going to find smaller 5 to 10 unit stuff.
Yeah.
Probably closer to 5 units in that area.
Yeah.
So like I said, you just have to like look around and see the market.
Yeah. I think like Philly area is also pretty expensive too.
Yeah, you might have to branch out of like not the major city, but maybe the secondary market or tertiary market or secondary market near tertiary primary, right? So like
Yeah.
what's 30 minutes outside of Philly,
Yeah.
30 to 45 minutes outside of there,
Yeah.
that's what I did, right? I did Oklahoma City, but I did one that was, more tertiary market in
Mm.
either. So yeah, just be open to any areas as long as like it's not high in crime and it's not declining population growth and there's a definitely jobs there, then you should be fine, right? So
Yeah.
um
I mean, even if the price point is a bit higher, since I'm a beginner, I can go in with like a lower number of units and
yeah,
then,
exactly.
right?
Yeah, you could do that, like I said. But like I said, when you do your mailers, you're gonna probably mail all of the whole state, right? Not just one area. Usually you'll mail out the whole state to get more leads, and then from there you'll see what bites, right? And then you see what bites, then you can assess. Okay, is this something I want to do? Is it worth it?
Yeah. Yeah. And so the property managers, do they have their own maintenance people? And like, how does that work when one of your tenants have an issue, but they're not on site, right? So they can't come and fix the issue right away.
Yeah. So usually when you're like, I think less than 50 units, you don't have an on-site like property manager. So for mine, they just contact the property manager, and then the property manager will send out their contractors to fix it. So they usually have a network of people that they work with to go there and fix it. So like for example, my property manager, they need to evict somebody, then they'll reach out to their eviction person. They have to. You're just leveraging their network, right? They're just kind of like the middle man. But if it's a bigger property manager, they might have everything in house. Might have like a maintenance person in house, in which case they'll just send it over to them to fix it. So that's why I said my property managers are like kind of small medium size. Like they kind of manage at most like maybe 400 units. So it's like a lot more personalized. Yeah, because you don't want them too big, because then if they're too big, they don't respect you, right?
Yeah.
Module, but if they're too small, then they don't have economies of scale. So you want that middle ground and make it known that you want to build up with them. But I haven't had issues. Like I guess I lucked out with my two. I'm not sure if it's lucky but like my two property managers in Oklahoma have been great. My mobile home park one was terrible. So I mean, I've
Mhm.
felt
Yeah.
this
Mhm.
on
Yeah.
that. Yeah.
Okay. And then also, we need an attorney to read all the contract and stuff. How did you find your attorney?
I didn't use an attorney. I just did it myself.
Hmm.
Yeah, like if you see the module on closing, basically each state some states have a standardized purchase and sale agreement. That's what I use for Oklahoma. I literally Googled Oklahoma purchase and sale agreement, and there's a standard form that you just fill out. And then literally I filled it out and I sent it to my title company, which is First American, and then they would, if you have questions, they can guide you. But filling out the standard template, I mean, it just took me 2 hours to do it. But the second time I did it myself, unless it's like Alabama, which is a title attorney state, in which case you just have to find a title attorney, and it's 2 in 1, right? They do title for you, and they're also your attorney. So it depends on your state, but honestly, that's all real estate agents do. They just give you a standard template that they ask you to DocuSign. That's it.
Right. Yeah. They just
I,
like fill in a blank.
yeah, I'm like, dude, you try. I've done multiple. Like Oklahoma even gives you templates for seller financing. Like,
Mm.
so like I don't need it. And like worst case, I just can like ask the title, like, hey, like, it's pretty standard, right? Like the forms are pretty easy to fill out. Like,
Is it
I think I
I
walked in. I think on my course, didn't I walk through me
yeah,
filling
you
out?
did, you did. But like
Yeah.
I've listened to some podcasts and they're like, you definitely need a attorney because you don't know, like, I mean, this like a something like a small amount of money that you pay rather than getting sued later down the line when you didn't realize there's like some clause that you didn't know what it meant. Um,
Well, if you're using a standard template that's approved by the state, I mean, it's number one, pretty generic. And then number two is if you have no partners, and it's just yourself. I mean, the only way you're gonna get sued is if like the tenant sues you, right? And
mm,
basically by having a property manager, they have their errors and omission insurance. So they're a layer. You have your property insurance as a layer, and then on top of that, you have an LLC that the property's in, which is another layer. And then on top of all of that, if you want to, you can do an commercial umbrella insurance policy on top of all that, right? So those
mm,
are your layers of protection that you have. I mean, you're not going to be, if people want to sue you, they want to sue you, right? But you just try to mitigate it. But honestly, if you just are a good business partner or a good operator, like you don't usually have issues. Like if you make sure your tenants are taken care of, like they're not going to come after you. It's when you're like a slumlord and you neglect things, right?
yeah.
So like, I'm very on top of things myself, and my property managers know that. So they kind of know that. Like I expect them to be on top of stuff, right?
Yeah,
Like,
I think the podcast that I was listening to was more about like sales clause between I don't know if it was buyer or maybe it was for partners.
yeah, I think it's more for like partners, but like honestly, if you're at that point where you're like, because disagreements happen, right? Because like if you look at contracts, they're all vague. It's like gray. And
Mm,
then like I can interpret it a certain way, and you interpret it a certain way, and then like that creates conflict, and that's when a lawsuit happens, right?
mm.
But like that's why I don't prefer to partner. Right. Right.
Yeah.
So like I don't think it's as big of a concern if it's just you buying it for yourself, right? It's literally just you.
Mm,
You're not raising money, you're not in a partnership with anybody. So
yeah.
really, of course attorneys will say that's a generic statement. Like, yeah, like attorneys think they're so smart. Dude, attorneys are stupid as hell, man. I'm fixing their documents all the time. Like when I closed my mobile home park, I kept on telling him what I literally told him what the hell. I'm paying them $500 an hour just to write out what I want them to write for me. And they'll freaking like slightly tweak it still and not be exactly what I wanted. I'm just like,
Yeah.
so I'm like, dude, like most attorneys, and like I listened to this asset protection attorney on YouTube, and he would create my documents, and I had another attorney look at it, and he was just like, oh my god, you can do a great job. So what I'm trying to say is, if you have like 10 attorneys in a room, they're never going to agree,
Mm,
right? So I'm
yeah.
like, I used to think attorneys are smart, but like I don't know, after this like most recent experience with this mobile home park, like they're stupid as hell. Like I literally gave my title attorney all the documents. He just needed to copy and paste, change the dates and change the name to the new buyer, and he couldn't even do that.
Mm, that's a
And
good
you're
point.
having me, a pharmacist, tell you how to do it, right?
Yeah.
So like, I don't know, man. Like I lost a little bit of respect for attorneys,
Yeah.
just through that experience. That they're not as smart as you think. And
Mm,
honestly, no matter if they look at it and another attorney looks at it, the other attorney will find something wrong with it.
yeah,
They'll come
that's true.
with that.
It's like
So
contractors too.
yeah, I mean, like
Yeah.
it's if they want to come after you, they'll come after you, right? But
Mm,
like you said, if you treat your tenants fairly and take care of things, and like I tell my property managers, money's not going to be an issue with me.
mm-hmm,
I'll pay you guys on time. I'll pay everyone on time. If
mm-hmm.
you need something fixed, let me know. I'll fix it.
Yeah.
Never know, right? Or I might ask you a couple questions to clarify, but if it makes sense, then I'll let you do your thing, right? I don't want to be the barrier.
Mm-hmm.
You know, like I had bed bug infestation. I paid $10,000 to fix it. You know, I had to pay
Mm-hmm.
for routine pest control. And if another unit has bed bugs, then we have to fumigate it again, right? I don't skimp on costs.
Mm-hmm. Yeah.
So I haven't had issues yet, knock on wood, but you know, it's
Yeah.
if you treat people right for the most part, then you know, usually they won't sue you, but you know, there's always that 1% where it doesn't matter what you do, they'll want to sue you.
Yeah.
But
Yeah.
what can you do
But
in that case?
yeah. Who holds all the security deposit that were returned at the end of a escrow? Like, do you get to keep them or?
Yeah, so when you close on a property, all the security deposits gets transferred over to you. Um, right. So
So
like,
when someone leaves, the PM needs to return the security deposit to the tenant, right?
yeah. So once they leave, the property manager will do an inspection of the unit, and then basically, if there's any repairs, then they'll deduct whatever is remaining. So let's say like your security deposit is $500, and they reviewed the unit and it needs about $200 of repair, then they'll deduct that $200 from it and return you 300.
Right. So I think I'm curious how, like, they have access to your bank account
Yeah. So
and
with your property manager, usually you either I have a joint account with my property manager on my 26 unit. So they basically can pay bills and deposit the rents and auto pay the rents. And I have another property manager where they have an escrow account. So basically the money goes into their escrow account, and then they will deal with the payments and the rents, and whatever is left over after the reserves, they'll distribute to you. So
mm,
there's two ways that I've seen it done. So I have one where I Bank of the West account with my property manager, my 26 unit. And then for my 20 unit, they have an escrow account. And basically, they require a $200 reserve per door, or $100 reserve per door. So I have 20 doors, so they require 2,000. So they have to keep 2,000 in their escrow account for reserve. And whatever is left over, they will send to me middle of every month.
okay, I see. So they
Yeah.
just debit your bank account to return the security deposit, and they just assume that you have that money in the bank.
Yeah, and they'll let you know, right? If you're short on money, they're gonna text you or call you, like, "Hey,"
You'll hear if something's wrong.
right? So like,
Yeah,
yeah.
yeah. Okay. Um, and there is no limit on the seller repair credit for commercial, right?
Um, I mean, if like the seller repair credit was like your entire down payment, the lender might kind of question it. Like, honestly, I don't usually tell the lenders because only title gets. So what happens is the lender doesn't see my seller repair credit contract. I usually send that straight to title.
Mm,
But technically, the lenders do review the whole title document too, so they will see it.
mm,
And they may question it, but if you, because I state that it's to basically the seller repair credit is to make repairs and renovation, or make renovations and improvements to the property. I forgot there's specific wording that I use. Like it's to make renovations and improvements,
yeah, I
not
think you covered that.
repairs. Because if it's repairs, it's a negative connotation versus renovation improvement. So you just tell the lender, like, hey, I'm going to use this money to fix up the roof. You know what I mean? And then usually they're okay with that. Or worst case, if they're not that nitpicky, the lender might require that you store that seller repair credit in escrow. And
I see.
basically, you have to show proof that, hey, I fixed the roof, and then they'll release the money from escrow, if that makes sense.
Yeah.
So let's just say I asked for $30,000 to fix the roof, and they said, no, we don't want to give it to you. We're going to leave it in escrow, and then you're going to show proof that a roof is fixed, and then we'll release the money from escrow. That's your worst case. Right?
Yeah, that makes sense. During the inspection, if you said to have a general contractor and inspector together, do they also stay like for 8 hours to go over all the units?
I mean, because it takes a long time, right? They have to go, and the general contractor has to, well, my property manager was my general contractor, so it was a 2-in-1 deal for me. But they were there the whole time. Like you gotta see all the units. You got to see the conditions of the units, what repairs are needed, what renovations are needed, what's the cost. So it takes a lot, right? It's a big project too. So of course they'll spend the whole day. I paid my general contractor $300,000, right? Or my project was $300,000 in repairs. So of course they'll stay. Or worst case, if they just can eyeball a couple units with you, but ideally you want them to go into all the units. Yeah. Oh. Great questions.
I just wrote down as I was doing the module, so
I know now you're making me think. I didn't include these in the module, so no, I appreciate that feedback.
I could be nitpicking too.
Because for me, I never thought about it, I just did it. I'm like, oh yeah, you just open a bank account, or it depends on the property manager, right?
Oh yeah. I mean, yeah, I think it's better for me to take action than just asking question. But as I'm like preparing and just kind of getting up to the speed, like mine is just ask you questions now, right? So that I'll get a full picture.
And to be honest, your property manager usually tell you like, oh, you got to open a bank account, and then like authorize this. Like they'll tell me, right? Like, oh yeah, like do this. You know, they know, right? So you have to ask them like, oh, like, so do you guys have an escrow account, or do we just have a shared bank account? You know, so it really depends. The escrow account's a little bit nicer just because like you don't have to open a bank account. They'll just like, send it to you, but it depends on the property management. So like I said, you learn a lot by doing it. The point of the course is to get you to know enough to know what questions to ask and how to critically think. Right? Like at least 70% to be able to be aware to ask the questions to understand the remaining 30% that you may not know. Right? Like that's the whole point of it, so that you know enough to be educated and to not get bullshitted and to ask the right questions.
Did you do cost segregation for apartments?
Did I do a what?
Cost segregation study?
No, I did not. Because I don't qualify as a real estate professional. So it just doesn't make sense for me. But if let's just say like I was married and then my wife was qualified as a real estate professional, and it's hard to qualify as a real estate professional, and you have to document your hours. If you do qualify, and let's say I'm still working my W-2, in which case you could do a cost seg to write it off, right? So it only makes sense if like if it's just you yourself and then you're working full-time W-2, there's no point in doing a cost seg because they're not gonna negate your W-2 income, right? Unless you're married and one of you is a real estate professional, in which case you would qualify.
I see. I did that with Airbnb.
That's different though. That's materially participation, right? So it made the Airbnb losses active losses. So it's different in terms of that.
Okay. I think those are the questions. I just bombarded you with questions, but I think it was good to talk it through together because I was just like going through the module by myself.
How far are you? I mean, I could probably look, but
I kind of did not in the order.
Oh, okay.
Yeah, because I'm like, oh, I'm curious about like how to do deal analysis, and then I will jump into like um due diligence or some other stuff. I think I have the creative financing left. I think that's basically it.
Yeah, yeah.
Um, yeah.
Okay, no, that's great. I might add some more modules talking about this. To me, I guess this felt so obvious, but I never thought about it. I was trying to make it step by step, but yeah, the bank account stuff is a good one.
I think
Um,
also another thing is you have like a lot of like detailed information, which is good, but after I mean I still have the creative finance module left, but at the end I'm like, oh, like I'm not sure where to start. I mean that's like the question I asked early, right? So it's good to know that like talk to PM and like what kind of information to get. And you did cover about how to find good property managers. It didn't really click to me that like that's the first step I should take rather than just going off to mailers right away.
yeah, no, I just thought of that too when I was like thinking, I was like, oh yeah, I did start, with talking to PMs first before I started doing my direct mail. But or I think I might did mine simultaneously, to be honest. I think I sent out letters and I just started calling a bunch of PMs. Um,
Mm,
so
okay.
so yeah,
Yeah, maybe I'll do that too.
yeah, maybe I can create a module in like terms of like what action steps to take. Well, this is why I do these calls too. So
Yeah, exactly. Yeah, no worry. Yeah, your
yeah,
course can be perfect. So
yeah, because like yeah, it some people are action oriented. Like you said, when you just go into action, everything just like flows kind of
yeah,
like organically. It's like, oh shit, I'm sending letters. I need a property manager, and then from there, oh, I have a property
yeah,
manager. So okay,
yeah.
cool,
Okay,
cool.
cool. Yeah. So maybe next time I'll come back with more questions or like um hopefully by the time I'll talk to like pick my markets and then have better information.
Yeah, yeah. Talk to a couple property managers. I think it'll be helpful to actually talk to the boots in the ground.
Mm,
Um, because yeah, that's kind of the soft skills that you have to develop, which is
yeah.
harder to teach on the course. Obviously, that's why I
Yeah.
do like these live sessions. But yeah, just be able to work with them and build trust and get information from them because like they should be smarter than you and they should be teaching you,
Hmm. Yeah.
right? So like I learn from my property managers every time, right? So
Yeah.
they should be teaching you, and then um, so yeah, just start talking to property managers. But I mean, is your time frame like 6 to 12 months? Like, what's assuming purchase price of like 500,000 ish? I mean, are you ready to strike in like 6 to 12 months?
Yeah, I think so. I mean, if I find the right one, but I really don't want to get into that like I don't even want to get into mediocre deal. So,
Yeah,
if it's not like a really solid one, like I'll just keep that money somewhere else. And then get away from the headache, you know? I want to make sure it's a solid one.
yeah, and yeah. Just I'm glad you're aware of that because basically just know that like yeah, it may take you a little bit longer, but you just need one good deal, right? To basically like for me, I just my 20th unit, I could have stopped and then I would be good, right?
Mm, yeah,
Um, so yeah.
yeah,
All
yeah.
right.
Okay. Yeah, great talking to you and catching up.
Yeah.
Thanks for
Glad.
doing these calls.
No problem.
Yeah, I'll see you maybe next week or the week after, or I'll let you know.
Yeah. Cool.
Okay. Have a good night.
Have a good one.
Bye.